Hi guys, it's Nishi here, hope you have a really good day. So in today's video, what we're going to cover is the question about whether or not you should stop growing your business to avoid VAT registration. And it's a really important topic right now, and I'll explain why later on in the video. But just as always, if you find these videos useful and you want me to continue making them, all you need to do is just subscribe to this channel and like the video. And we've got a lot more really good content on its way. So let's talk about this. Should you stop growing your business to avoid VAT registration? I'm going to cover a few things in today's video. Firstly, we'll just go over the fundamentals of VAT registration, how it works. We'll talk about why the VAT threshold is such a challenge for some businesses. What we'll do is we'll briefly cover the benefits and advantages the government do give you in terms of trying to cushion that blow of VAT registration, and then I'll answer your question in terms of whether or not to stop growing your business to avoid VAT registration. Okay, so I'll go straight into it. What is VAT? Well, it is value added tax. It's essentially a sales tax. Many countries in the world have an equivalent of it. It's not always at the same rate. The threshold's not always the same. But essentially, the idea is when someone buys something in a shop, they pay for that thing, plus they pay the tax, and then that tax is meant to find its way back to the government. The way the VAT system is set up is really, it's not meant to impact the businesses in the middle, it's only really meant to impact the end customer. But what we're going to talk about in this video is why it will impact the businesses nearer the end, the really consumer-facing businesses. So let's just quickly talk about the VAT threshold then. At the moment in the UK, it's £85,000. What does that mean? It means that you can make £85,000 of sales in a year and without having to register for VAT. One thing I'll say about that, it's £85,000 of sales within the scope of VAT. So there'll be some sales that are outside the scope or exempt. What that means is you can make as many of the sales that are exempt or outside the scope as you want, and they don't count towards your VAT threshold. That's really relevant if you're exporting stuff. That's really relevant if you're in certain fields like education or medicine, because it means that a lot of what you sell might not even count towards your VAT threshold, and you might never have to register. But that's just something to bear in mind. So it's £85,000 of sales within the scope of VAT, and the idea is, and this is one of the things that I'd really like you to take away from this video. A lot of business owners think that the VAT threshold is actually measured on a calendar year, or it's measured on a company year, or it's measured on a tax year. That is not the case. The VAT threshold is always based on a rolling 12 months. Let's say we're in the month of February right now. Then what that means is you've got to look at the 12 months of sales up to the end of January and decide whether or not they went over £85,000. If they did, then you would need to register for VAT. Something else just to factor in there as well is it's based on what you're invoicing, not based on your cash sales. Why is that also relevant? Well, if you're growing as a business and you're offering your customers payment terms, then it could well be that your cash balance has not, the amount of cash you're not getting in has not caught up to the amount you're actually invoicing. What that means is maybe a few months down the line, you're expecting a lot more cash to come in, but based on stuff you've invoiced now. But actually, what you've got to factor in is it's all based on what you've invoiced, not whether you've received the cash or not. So that's really relevant as well. So if you're thinking, oh, actually, I have invoiced all this stuff, but if I just look at the cash that I've actually received, I'm still below the 85,000, then it's an really easy way to get caught out. Why is being caught out by VAT an issue? Well, HMRC can figure out when, according to the rules, you really should have registered, and then backdate your registration to that point, and then ask you for all the VAT that you should have collected to be paid over from that point onwards. So for some businesses, especially where they've gone years without really realising they needed to register for VAT, then they can end up with very hefty backdated tax bills and penalties. Okay, so now we understand the fundamentals of VAT. Let's just quickly talk about why VAT registration is such a problem for certain businesses. So before I go into that though, what I'll say is actually VAT registration isn't a problem for all businesses, especially like the ones in the middle I described earlier on in the video, where they pay their suppliers VAT and they just reclaim it from the government, and then they charge their VAT registered customers who don't mind being charged VAT because they're just going to reclaim it. They charge their customers VAT and then they pay it over to HMRC. So overall, the VAT doesn't impact that type of business. So there's a lot of businesses that aren't really impacted by VAT. But what I would say in that situation, though, is there could be an opportunity to do an early registration, even if they haven't gone over the threshold, because there are benefits to VAT registration as well. So what I'll do is I'll cover that in another video. But for purposes of today's video, why is it such a challenge to be VAT registered for certain businesses? Well, like I said earlier, VAT is a tax that's meant to be passed on to the end customer. That's all well and good, but what if your end customer doesn't want to pay VAT? Let's say you're selling teddy bears to a customer for £50, and then suddenly you have to go VAT registered. By the way, these are probably really good teddy bears. You have to go VAT registered, and you've then got to charge them £60 to cover the VAT as part of that. That customer might say, hey, I'm not paying £60, I'm happy to pay 50, I don't want to pay 60, so I'm going to go elsewhere. And then because of that, your sales would drop. What happens in that situation is quite often the business owner has to then take the hit, because if their customers just outright said no, we won't pay the VAT, or there's strong indicators coming from their target market that that customer won't pay the VAT, especially on items that are deemed as commodities, really, then what they have to then do is they have to swallow that VAT themselves. In reality, a lot of business owners, they do put their prices up a bit, but usually not enough to cover all of the VAT they've got to pay over to HMRC. So to some extent, a lot of business owners, when they do go VAT registered, they are subsidising the VAT that the customer should be paying. And when they subsidise the VAT that the customer should be paying, it really comes out of their margins. Let's say someone was selling something for £100 and they went VAT registered, and the customer said, well, I'm not paying it a penny extra. Then ultimately, if that business wanted to swallow the entire hit for the VAT, then out of the £100 they're charging the customer, they've got to pay £16.66 of that over to the VAT man or woman. And that's all coming out of their margins. Their margins might only be like 10%. Then it's wiped out their margins and pushed them into a loss. But the other side of that is they might be paying suppliers, they might be importing stuff, they might have costs where they can now reclaim VAT on. So the hit to their margin isn't quite as bad as 16.66%. But in reality, it's still... It's unlikely that all the costs that they can now recover VAT on will make up for them having to pay sales VAT on the entire selling price of their product. So this is the scenario where actually it's a big challenge for certain businesses, because if the customer won't pay that VAT, then it's got to come out of their margins and it might completely wipe that margin out. So what I want to cover now is essentially the things the government actually does to make your life easier when you do go VAT registered. So HMRC and the government aren't all bad. Ultimately, they want to make sure as a business that you do have some support when you're going VAT registered. So a few of the things that you can really rely on is there's something that's really good, in my opinion, called the pre-registration VAT reclaim. So think about it this way. When you go VAT registered, you can backdate a lot of your VAT reclaim to up to 4 years. So a good example of this is, let's say you bought a laptop 3 years ago, you still got the receipt or invoice, and you want to reclaim VAT on the cost of those on that laptop. You couldn't reclaim that VAT in the past because you weren't registered, but now if that laptop's still in your business 3 years later, then you can reclaim the VAT on that laptop. So that's a cash boost. Let's say you've been paying your accountant for the last 6 months, you should really pay your accountant. Then when you go VAT registered, you can reclaim the VAT you've paid on that accountant for the last 6 months, or any kind of service really. Like if you've got rent where you've been paying VAT, you can recover the VAT on that rent for the last 6 months. And also, like if you're holding stock which you bought when you weren't VAT registered, but you're now VAT registered, then you can actually reclaim the VAT on that stock that you bought. So the idea behind it is this pre-reg VAT reclaim. It makes the first couple of VAT returns, or the first VAT return, it cushions the blow of having to register for VAT and the cash flow blow of having to register for VAT, because ultimately it is still quite a shock to businesses. So that's just one thing. And another thing, you have some options in terms of the VAT scheme you want to use. So depending on the size of your business and the nature of what you do. But some VAT schemes let you pay like a fixed percentage of your sales, but then you forfeit the right to recover VAT on your purchases. But overall, if your purchases are relatively low and your sales are quite high, certain VAT schemes can be really beneficial. You can also decide whether you account for VAT based on what you've invoiced or what you've actually received in cash. That can be quite useful, because if you're invoicing customers and they're not paying you for like 3 months, 6 months, 6 months would be ridiculous, but they're not paying you for 3 months, then something like an invoice-based VAT scheme could be much better for you than a cash. Vice versa. Something like a cash-based VAT scheme could be much better for you than an invoice-based one, because that would be delaying your VAT payment essentially till you get paid. So there's a lot you can actually do. And also, one of the things is you get a grace period when you actually first go VAT registered. So if you went over the VAT threshold at the beginning of December, for example, you wouldn't actually have to register for VAT until the 1st of February. So, in some cases, you can even get up to like 8 weeks as a grace period before you actually have to go VAT registered. So there is some support from the government when you first go VAT registered, and it's well worth talking to an accountant about that. Okay, so now what I really want to talk about is the answer to this question. Should you delay or stop growing your business to avoid VAT registration? And the answer to that, in my opinion, in the vast majority of cases, is no. There might be instances where it makes sense, especially if you're thinking of retiring and you're coming up to retirement and you just want to slow things down. But for most businesses that are being run as a growing concern, it's not a good idea. And the reason for that is we have inflation now. We've always had inflation, but 5 years ago, it wasn't that big an issue. It was actually quite low, and people could make the decision about whether or not to stop growing to avoid VAT registration. However, now inflation is like at 10%, sometimes it's been 12%, now it's going down. But ultimately, the inflation's quite high. You know what's not going up, though, is the VAT registration threshold. And what that actually means is if you don't do anything and you stop growing, the VAT registration threshold, you won't be able to put your prices up. So you'll probably have to do, or if you put your prices up, you'll have to do less work. But what's really going to happen is ultimately your costs are still going to keep increasing, but your sales aren't going to increase. And what that means is you're going to get your margins squeezed from the bottom anyway, because as your costs increase, you're going to end up with less and less if your sales don't increase. So it's really important to think about it that way, because the reason why I said it at the beginning is this video is that this question is more important now than ever, is because inflation is more relevant now than ever, and inflation means that you do have to keep growing your sales, and essentially the government has made a clear decision, and I think it's a deliberate decision not to raise that VAT threshold, because I think the government think it's too high. In my opinion, I definitely think it's too high, and it's probably one of the highest ones in the world, and it incentivizes people who could grow their business, create more jobs in the economy, create more wealth in the economy, incentivizes people who could grow not to grow, and that's a really big challenge for the economy. I know the other side of the argument, you're saying, well, you know what, it allows, having a VAT threshold allows a startup business to compete with a more mature business, so it allows new competitors into the market, because ultimately they can charge lower prices, whereas the larger businesses, they have to charge higher prices, but then they're probably getting lower costs because of their economies of scale. So lets people join the market and then compete. But I think there's a balance to be had here, because in certain cases, it's also a massive deterrent to people actually growing their businesses, which is something we really need as a country and an economy. But the second part of it as well is it's really hard to stop growing. If you're not going forwards, you're going backwards. It can be very hard to just maintain a certain position. So that's and I think it can do a lot of things for your mindset as well. So when you tell yourself, hey, I'm not going to grow anymore, because sometimes you think it can push you in a position where you stop striving to develop your business and yourself, and that's a really dangerous one. But the first thing about inflation is probably the most relevant here. So the final thing I really want to talk about, though, is let's just talk about a good strategy to adopt when you do need to go VAT registered and when you're coming up to that threshold. The worst thing you can do is go over the threshold without realizing. So it's really important to monitor your figures and get your accountant to help you monitor the figures in the correct way. But the other thing is, the second worst thing you can do is just stumble over that threshold, because one thing you've got to recognize is, if you're, this is a ballpark figure because it really depends on your margins and the nature of your business, but if you're at a VAT threshold of £85,000, you go over that, and just say to £86,000, you will make a lot less money just by making that one extra £1,000 of sales. It will take a big chunk out of your margin if you can't pass it on to your customers. So what that means is, and actually in certain cases I've seen, by going from that 85,000 to make the same amount of money, once again this is completely dependent on your margins, but to make the same amount of money by going from £85,000, the amount of profit you're making at 85,000, in some cases you have to get your income and your turnover up to 110,000 or 120,000. So there's a whole income area there where you're still making a loss, and to go from the same profit from 85, you sometimes have to make 110, 120 just to recover the lost profit, and so you've got to make the sales. So it means if you just stumble over this VAT threshold, you're going to start making a big loss anyway, and that's why sometimes it is worth just slowing down, or when you're coming up to that threshold, just sitting down, making a solid plan, because this is one of those situations where you go over that threshold, you have to go big or go home. You can't just push ahead or plod ahead slowly. It's one of those cases where you've got a lot of ground to then catch up on, and you need a really solid plan in terms of your cash flows, in terms of how you're going to manage the VAT, because VAT does make things more complicated from a cash flow perspective. It makes also, you've got to have a solid plan in place for the growth. So if you're just relying on word of mouth, and you're going to, if you just rely on word of mouth, sometimes it's one of the things you can't necessarily control, although there are ways to control word of mouth. But ultimately, that's where you've got to build your growth plans as well. So it's, what I'm essentially saying is, when you approach that VAT threshold, you've got to really come up with a solid plan for your growth. And that's really the stuff I wanted to cover in this video. And I think, as a bit of a recap, we talked about the fundamentals of VAT. I think I pointed out some areas that you just got to be really aware of, because it trips areas where a lot of business owners get tripped up. We talked about why it's such a challenge for certain types of business. We talked about essentially the support you get from the government when you do go VAT registered, and then we've really talked about the sort of strategy you need to adopt, and the mindset you need to adopt when you're approaching that VAT threshold. So thanks for watching this video. I just want to remind you, if you found it useful, and just remember to like, share, follow, and subscribe. And also, we're going to be doing some really good videos. We've got some really good videos coming up as well, so keep an eye out for them. And if you want to talk about how this applies specifically to your own business, if you want to talk about how to get that growth plan in place, because as a business, what we really as accountants, what we really specialize in is we help people build the systems, the processes, the cash flows, and the business plan to actually achieve that growth. So if you don't know how you're going to keep growing once you achieve that, hit that VAT threshold, but you do need to keep growing, then we're the people to talk to. If you want to get in touch with me and book in a phone call and a strategy session with myself, all you have to do is go to our homepage on our website, naccounting.co.uk. And if you scroll down a bit, there's a little area where you can book yourself in for a meeting with myself, and we can talk about how all of this applies to your own business. So thanks for watching. I'll see you at the next video.